The infinite banking concept is you taking back the banking functions in your life. So I just told you how a bank operates. So what we now have to do is take back the banking functions in our life. And to take back the banking functions in our life, we must take back control of our money. Remember earlier, I said, when people ask me, what do? I teach people how to take back control of their money by showing them how to be the bank using a concept, a process called the infinite banking concepts. And what is the infinite banking concept? The process of taking back the banking functions in your life. So in order to do that, we must first change one thing, very simply, change one thing. And that is where our savings goes first. Because if we put it into the bank, well, we already know we gave up control and they're the ones going to make the money in the spread. But if we put it into a 401k, well, we got all sorts of other issues like we don't have liquidity, we don't have access without penalties. That money's going to only be available to be invested into whatever things they tell us they want us to invest in. You don't just get to pick from the universe of investments in your 401k, do you? So you don't have control. So we must figure out, where can we put this money where we are in full control of it? Well, to figure that out, all you have to do is look back in history. And it's not hard to find. You look back to the wealthiest families in history. And also, if you want to really see the history of the infinite banking concept, I made a great video on my YouTube channel. So let's pause real quick. Shameless plug. Go to YouTube and punch in the Chris Naugle. That's right. And make sure when you go there, you subscribe. Hook a brother up a little bit. I'm doing this for free. There's no advertisements on this podcast. So check out my YouTube channel, subscribe to it, and click that little bell, smash that bell so you're notified every time I put new content out. You get to benefit from that. So that's my shameless plug. Let's get back to the infinite banking concept. And then hopefully by now you will have watched that history of the infinite banking concept. But families like the Rockefellers, the Rothschilds, the Morgans and Stanleys, you'll kind of notice one familiarity with all of those is they were all bankers in one way or the other. I mean, definitely the Morgans and Stanleys. The Rockefellers, you would say, no, they were in oil, but yeah, they still ran a banking system, but it was a family banking system. The Rockefeller family banking system. And the Rothschilds, very similar, were also bankers if you look back in history. So they're all bankers. But what did they all figure out? Well, they all figured out that their money, when put into a bank, was not in their control. And also they figured out the money, when it was put into a bank back then, was not really that safe. Because if there was a run on the bank and the bank went bankrupt, well, they didn't get their money back. So they were seeking a safer place to put their capital, and a safer place that then they controlled their money. So where did they figure out that that place would be? Well, it wasn't a bank. It wasn't Wall Street. It wasn't some fictitious thing. It was an old institution that all of you know about, all of you have probably given money to, and all of you absolutely have used in one capacity or the other. And that is called the insurance industry, specifically the life insurance industry, because they are in the business of providing guarantees. They are in the business of providing guaranteed death benefits. But what you don't know is they're also in the business of paying uninterrupted compounding interest. And because they're an insurance company and they can make guarantees via contracts and live up to them because they've been around for hundreds of years, well, that's where the wealthiest families in history landed. And they also landed there because they figured out and knew to be fact that insurance companies were the strongest and most stable financial institutions of the time. And that is still true today. So all they had to do is take all their money, gather it all up. Yep, got it. Got all my money. All right. And I just got to find an insurance company. Where's life insurance? Oh, that's a life insurance company. Walk in the front door and be like, excuse me. Where can I deposit this money? Anyone know? Where's the deposit line? Is there any tellers maybe over there? No? What do you mean? What do you mean you can't deposit money here? Well, I know you're not a bank, you're an insurance company, but somebody said that I could come in here and create my own banking system at this insurance company. I mean, come on, who here can take my money? No one. And why is that? As I get rid of this little buzzer, well, that's because they're not a deposit institution. So you see, these wealthiest families had to overcome how do they find a way to put their money in the insurance companies and take advantage of all that safety, security, that control of their money, and the guaranteed interest that that insurance company was willing to pay them. And they figured it out. They figured out, well, guys, we got to use mutually owned insurance companies because to be in control of our money, we must be an owner of the insurance company. So we cannot use publicly traded insurance companies. No, no, no. We must use mutually owned, keyword, mutually owned insurance companies. And we must find a way to take ownership or a portion of ownership of that mutually owned insurance company. And here's how they did it. They did it through a product that all of you know about, all of you have used, and all of you may like or dislike, I don't know, but it is called a whole life insurance policy. So what they did is they found a way to put their money into the insurance companies through a product called a whole life policy, but they designed and engineered the contract. And they did that so that a large portion of their money just went to the insurance company's general account, in which they received a very nice guaranteed interest rate for the rest of their life that never changed. And because the company was mutually owned and because they were technically an owner through a policy, so they were a policy holder, which makes them kind of like an owner, they then got to partake in dividends. So when the insurance company doesn't use all the premiums that they account for or that they take in every year, they return those unused premium payments to the policy holders, the owners, via dividends. So these wealthy families, and you as well, probably want to take advantage of those dividends as well, because guaranteed interest plus a dividend is definitely not such a bad thing. So that's what the wealthiest families did. Back to the infinite banking concept. So now what did we do? We determined that we had to change one thing, and that was where our money went. We decided that that money was going to go into a specially designed and engineered whole life insurance policy through a mutually owned company that pays dividends. Mutually owned life insurance company that pays dividends. Now, how do we take back the banking functions in our life? Now that we've got our savings over here, we're going to call that capitalization. We, through premium deposits, have capitalized our banking system. No different than the Rockefellers, Rothschilds, the Morgan Stanleys, Walt Disney, Ray Kroc, Pampered Chef, Doris Christopher, all of these folks did the same exact thing. They capitalized their banking system by funding, through premium deposits, a whole life insurance policy. Now, the next step is we must then think like a bank and act like a bank. So now we've got a banking system. You might just say, no, you don't. You've just got a whole life policy. Think as if I have a banking system because I am in full control of that money. You see, now today, if I want that money or I want a portion of that money that I just deposited, I can take it out anytime I want, immediately in the first 30 days when my check clears. And I'm not going to just take it out as a withdrawal, although I could. But if I take a withdrawal, my money leaves the account and now I'm earning interest and dividends on a lower amount. But see, in the policy, I am allowed to take loans anytime without any questions. So all I'm going to do is act like a bank. If I owned a bank and I wanted money from my bank, what would I do? I would take loans from my bank. Of course I would, because that's just what you do from banks. You borrow money and take loans from everybody else's bank. So if you owned a bank, of course, you would never take a loan from somebody else's bank. You would take a loan from your bank. Think as if you are the bank. So now I'm going to take a loan from my bank, the policy. And the insurance company allows this. But you see, the insurance company not only allows this, the insurance company allows us to take this money without any of those burdensome loan applications. We just take the money. The insurance company will give it to us because the insurance company knows that someday they're going to have to pay a death benefit to our beneficiaries, guaranteed. So all they're doing is they're advancing us part of our death benefit while we're living, up to the amount of cash value that we have in the policy, because the cash value must collateralize the loan against the death benefit. Does that make sense? So just like any other bank, the loan we're taking must be collateralized, and it's going to be collateralized by the amount of premium deposits plus interest and dividends compounded in your account, which goes up every single day. Because in the whole life policy, your money can never go down. It can only go up. It can only grow. It can never do anything other than that because it's compounding at a guaranteed interest rate. And then if you get a dividend, now you got a dividend that's compounding. Do you see how this works? It can't do anything but go up. Very different than your 401k, very different than the stock market. So now we've got this loan. And also, just so you all know, this is Lazy Cash, our shop cat, who just showed up for this episode of the podcast. He's always a little bit late, but that's okay. He's just going to sit here and be lazy. So back to infinite banking concept. I've got a loan. What am I going to do with this? Well, you're going to do the same thing a bank would do. You're going to find a way to make this money go to work for you.